This is the V75 market. So if you can see, we have a very interesting move here. You can see that the market hasn't given us direction, but we can obviously observe this latest impulsive move, which was the move of the sellers. So when you want to make good decisions as a trader, you have to make sure that you understand what the market is doing at that particular moment. So what we're going to do here is that we're just going to look at how the market has been behaving recently. So you can tell that we usually have a choppy zone or some kind of a channel, and then we have an impulsive move. Same thing applied here. We had the channel and then we had an impulsive move. The same thing, if you can just go back a little in the past, you can see that the market has been always behaving like that. We have a channel or a choppy market move, and then we have an impulsive move. But then the question is, how do you maximize profits in this kind of a market? And obviously the first observation is that in this particular market, you can't make more in the channel or in the choppy move. Here in these areas, you can't make a lot of money. Why? Because of the waves. The waves are so small. So for you to make money in this channel, you'll have to go into a lower time frame and trade according to this channel or according to this diagonal range. So what you have to do here is that you have to target the impulsive waves or the bigger waves, which are emerging usually after that particular channel or diagonal range is complete. So that's where you're gonna make money, but it's a little bit hard for you to identify these because they just happen all of a sudden and they are breakouts. But if you can see here, if you can pay attention into how this market has been moving, is that you can see that we had an upward choppy movement, and then it is followed by a downward impulsive wave. The same thing applied here with a downward choppy movement followed by an upward impulsive wave. And again here we had the range moving upwards, and then it was followed by a downward impulsive move. So you can see that these moves, they are a little bit opposite towards each other. So it's more like a breakout of a channel, but on the opposite side. So if we have a channel going up, we expect the breakout to be downwards. If we had a channel going down, we expect the breakout to be upwards. It is not our minds that are telling us that, but it is the market. It is showing us that through history. So here in this particular moment, we're expecting the market to give us some kind of a range maybe here, but we don't know where it's gonna face. So if it's going upwards, we know that we'll expect a breakout to be downwards. But if it goes a little bit downwards, we know that we're gonna expect a breakout to be upwards. So this is what we're expecting at the moment. So there are no big moves that are likely going to come. We don't say that they are not, they might not appear, but it is highly possible that we get a range based on the previous behavior of the market. So this is what you should be waiting for at the moment. Wait for the market to enter in some kind of a range depending on the direction or the impulse of the range. Then we know that, okay, the breakout that is coming is going to either be upwards or downwards. So me going back to the first thing that I said, that if you want to trade these ranges or these diagonal channels, you have to go into a lower time frame. It would be easier for you to actually identify the moves. For an example here, we know that now the market is likely to enter in some kind of a channel. So we can go to a lower time frame and then we can try to make decisions based on that particular time frame, because we know now, as you can see here, that in the smaller time frame already the market is trying to show us how it is actually behaving. We can see that now we already have lows and highs which are beginning to form. If you can see here, we already have higher highs and higher lows. So it tells us that the market is likely going to move in some kind of an upward channel like that. So you can trade this as your trend. You can try to say, okay, let me treat this as my smaller uptrend and go with the trend until a breakout appears. And when the breakout appears, you know that what you're going to be doing is actually executing those selling trades, because that's what you are expecting as the market was doing previously here. That we can see that there is some kind of a trend going up but then when that trend was broken, the market moved down impulsively. So this is the same thing that we're expecting in this particular moment, that okay, the market is going to move in this trend in this smaller time frame, and it will break on the downward side. So this is how I usually go about analyzing the market. I just try to understand how it has been behaving and then follow that move. I don't try to do something new that the market has not been doing. So I'm just going to keep it short and leave it here. Thank you guys.